Hello my friends. So today I'm going to show you, and I will be speaking about open interest, the global open interest, and then we will have a look what is the market composition inside the open interest, so you can see exactly who is long, who is short, like what are the biggest traders doing, what are the smallest trading doing, retail, and the ratio to longs and shorts. Extremely useful stuff to your day trades and swing trades. We are very good in scalping now. Now we need to be even better, for day trades, swing trades, and spot. So you do not go against the market, in some certain conditions. This is the first thing I watch on Coin Analyze. You need to really have the open interest for coin margin contracts. Those are spot markets, okay, which are always leading the market. They are, the leaders, but sometimes leverage can also cause some nice moves, but it can be absorbed if you go against the overall market trend. The second one is stable coins, which are the futures and perpetuals. Okay, these are the settings, by the way, and these are the settings for this one. Cool. I will be using the example of our recent drop from 53k to 41k because we are trading this range for long. We can see after the move down there was massive open interest down move. We wiped out with a lot of liquidation happened, a lot of people close position. That's what I like when we build up open interest. That's what I like really big drop in open interest. What happens after, that's also very important. So we see spot market is very mild, accumulating and buying. Open interest is very reluctant to rise. We can see the stable coins are rising a lot more. Okay, people take more leverage positions. So in this range, you cannot tell exactly when you see these open interests how many longs are in the market and shorts, but we will have a look on the tools and it will tell you. But judging on the market, you can see more longs are trapped. Okay, they were trying to long and they are getting trapped in this range. Why? Because there was no drop in open interest yet, like the massive one, which would wipe out all these trap longs. Yeah, they are definitely trapped there. So yeah, even this drop caused mild downside, but it was not nothing massive. So the downside is still more probable, but of course we can have a relief rally to 47, 49k, and it's gonna be there. Initial buying point, so it's gonna be very hard for the price to go over. So now we need to go to hyblock. It's extremely useful. What I'm using here is volume delta aggregated cumulative. Okay, it's showing us delta for the long time accumulation, and now you will do settings for 1 million to 10 million as first one. The brown line, it is showing us the most clever, the biggest traders on the market. What are they doing? Those are usually the funds, the good traders, institutions, and so on. Like those are the main flows which are affecting the market. And now we have the other extreme. We have the retail, which are the 1,000 to 10,000 positions. We can use this drop as example again. So now we know open interest went drastically up. Now we can see what happened over here. Let's go to situations. So. So we can see we are ranging nicely here. What are the biggest traders doing? They are actually slowly selling. They are getting rid of the positions slowly in the market. So this was more retail driven range. Look at the drop. Massive upside, yeah. Massive upside in the move. And now I would like to show you there are situations. It's not always, but you get these warning situations. This one, for example. Look here. So those longs from over here from retail, they are getting squeezed. You see how they were aggressive. They are slowly closing positions. This swing failure pattern happened here. Yeah. Now you find the bottom, and over here this is very interesting. So they are really heavily longing. Yeah, from the top of the range. They were expecting probably break to 53 and higher. They are buying, but the price is going down. So this is the big point where we actually trapped a lot of people, in my opinion, from this area. Yeah, look here, it's rising, we are going down, immediately trapped. Market actually returned to their entry positions where the big rise started and immediately rejected. You can use this as big confluence when you know where is the majority of people trapped. Even here, markets trying, trying, then we went down. This was also very interesting. This was very massive rise, almost, yeah, crazy, 1 billion upside. So people were very heavily long also from this region, same like here, but they are not getting rewarded at all for their long entry, for nice take profit, nothing. They are getting trapped, same like here. What are the bigger traders doing? They are just continuously going down. So after you actually break these two lows here, those people longing here, they had a lot of stop losses here. So this move down mainly, I think, squeezed a lot of traders from here, retail, and from here. These two big rises, yeah. You can see it on volume. Also watch the trade count. The trade count is telling you if it's very high number, you have a lot of liquidations and closing positions, which was very high here. And now you can see even this range, people are still losing fade and closing. What are the biggest tradings doing right now? We do not see downtrend again anymore. We are seeing they finally, after from 69k, we are seeing sideways movement. Okay, sideways. There is no downtrend yet. It is signaling me they are starting accumulation here. They're already starting accumulation because they know we will have a relief rallies as well. So reward ratio is much better here. Like, why you would be shorting here? Like, retail is shorting or closing positions here. It's just too late, Actually, your reward ratio is to the upside, yeah, even for relief rally. Even if we do swing failure patterns, yeah, we will be ready down there. But yeah, the clever money going sideways now. They are not selling aggressively and reading off positions. And now when we go to the history, you will see the clever money actually lead. Usually they are starting the market moves. Let's go to the history a bit. Also, I can finish this with this one. So you actually see exactly the long and short ratio. Another, you need to combine this both. So you will be watching open interest, you will be watching these deltas, you will be watching the long and short ratios. There is a lot of you can get a lot of information from this. Even here, for example, the shorts finally started to pile in and then the market had fuel to squeeze them, yeah? That's your first example. You see right now, the ratio on Binance, which is the biggest basket in the world on leverage. We are, again, 75% long and 25% shorts, so there is still potential to squeeze longs down. But, you can get really fairly without problem to 47, 49K, then squeeze them. That's fine. But potential to squeeze is much larger here. The Binance, pretty better. 52% long, 47% shorts. That's pretty fine. We can see even before the drop from 57K, look at the extremes. Market was 84% long on Binance. Absolutely crazy. Of course, there is a much higher chance you will squeeze people. Binance, Bybit, 58%. So Bybit is more clever traders. Look here. People are, they are longing, they are doing bigger exposure. We can see exactly what is happening here, and then we will see who is actually buying. You will go over here, you will see. And what happened when we had this was our range from September, 7th September to 30th of September. Around 40Ks. What happened over here? Look here. Very different ratios. Yeah, market is pretty balanced. Yeah. And look here, the shorts. There was very heavy shorts in the market. They actually covered longs. You see, 55% shorts, and I think we had slightly negative funding rate. So they were shorting too late. They were expecting probably deranging more here. It was too late. They actually become fuel. Yeah. So this is how you can use these tools. We do not see that yet actually on current. But always pay attention to something like this, yeah. Binance is important from the basket. Even look what happened during the, the range, the summer range. This was where a lot of people lost money, but actually it was absolutely great accumulation. We again had massive long ratio before the drops. Yeah, people were longing from 60k, crazy. When you finally get equilibrium between longs and shorts, it's possible, range and bottom area, at least temporary. When the shorts became too aggressive over here, they actually get squeezed. We went down but we squeezed them. And then we had this grinding down, market was bleeding out. Yeah, look at this. Bleeding. Look at the longs. They are already expecting we break the range, 73% of the longs, and now we finally bled them out. Look here. They're even closing here. They do not believe this can be the end of the range. Shorts are rising, okay? At this point, we started to have negative funding rate. I remember that because I was trading that a lot. Very big negative funding rate. So shorts are piling in, but market is just going up, so it's trapping them in immediately. Longs are still not believing the upside. And look at the move. Finally, when so many people got like shorts totally wrecked in this move. Yeah, from 34 to 40,000. This was absolutely great setup. Again, shorts getting aggressive, and now they are getting squeezed. It's repeating, yeah. $52,000. This was market was pretty balanced, at least on Binance. Yeah, this we discussed. Also, we can have a look one more time on here. If what happened from 70,000, almost 70,000. Yeah, this time the aggregation was going down, so people started closing positions. They were opening a lot of positions from here. Huge positions, you can see that. Massive rises from here and here. They were greedy, so when the market finally starts to go down, everybody was closing. But the clever money, there was no uptrend in them. They were just closing down. We can go a bit to the history as well, so we can compare clever money behavior with... we can actually move back to the summer range. This is the best example. Also, do not go in history. Do not go beyond this point, because the data was not so published before so much. They were really skewed. I would say from this range they work pretty very nice, because they built some history and so on. You look at the example, yeah. You will be looking for situations like this when like stars align for you, like the retail. Yeah, retail started to go long here. There was, look at here, this was big upside from the retail, also from the normal traders as well. But retail definitely made divergence. They are getting heavily long, very heavily long. So this region, we know the retail is heavily long in here, and not just retail, also the clever traders. So if market wants to squeeze them, they really need to take out this low. They need to do that, because their stop losses will be under this low, and the liquidity, when you count the percents. Very clever move here, okay? Very clever move. And you squeeze them, and this was really good low to actually go long after you squeeze all of them. You could treat it as a swing failure pattern of this also. Very, very nice. Since that moment, you can also see what are the clever traders doing in the range. You can see that very clearly. They are accumulating. There was downtrend until this point, but you can see the downtrend stopped, and we started to make like going sideways, and then this was one more low here. This was total pain in the market. I remember that. Most people very bearish. They were expecting 22, 25k. But retail already going long, of course. When we finally broke out, we started trending with clever money as well. That was the final move. You really need them on your side so market can trend upside. That's what we want to see now. The big money come and start to uptrend. Very, very nice. When they started to take profit, we had nice pullback. Pretty simple. And look at their behavior. I think this is at 50,000. The biggest money, actually, globally, they started not piling in, but they started to cut out their positions. They were probably preparing for this drop here. But you could see the drop wrecked them as well. So yes, you will be looking for divergences. Okay, that's what matters here. Because right now we have massive divergences, yeah. Retail going crazy and getting big, like trapped. So I would really, yeah. So if you have hyblock, I definitely recommend you do this. You know, set up it on your charts, like me. And I will be, if I see this, I will be informing you when I see the divergences and so on. So we can be pretty much prepared. I showed you multiple examples. I hope it's gonna be very, very helpful to you. It's definitely helpful to me. I wish you good trading day and see you around. Bye.